Hey everybody, Flip and Danny here, founders of the Freedom Real Estate Group, family of companies. That's almost like the what was it, the Greg Brady? No, it wasn't Greg Brady. It was Peter Brady going through puberty.
Yes.
That dated me right there. All right. Hit the like button if you remember that episode.
That's right.
Okay, so this episode actually to our podcast, and our podcast is called
Freedom Through Passive Income.
There
He
we go.
almost forgot that. Did you guys all caught that, right? You're witnessing to him.
Good thing there's a title before this.
Yeah.
So people know. Yeah.
Okay, good.
Anyway, welcome to this episode. Hopefully we get into the episode eventually. This episode is entitled Balancing Liquidity and Long-Term Investing.
Yes, I think it's super important.
And there are two different things.
Yes.
So liquid investments, the pros are, well, it's liquid. It's easy to access. The cons are it allows people to make emotional decisions.
Yeah.
And also typically a lower interest.
Yes, because the benefit of a liquid type investment is the liquidity.
Yeah.
So it's not always the lowest of interest. It depends on the risk factor, right?
Right.
And what you're putting that money in. And if it could drop to zero tomorrow, well, you might be getting a high interest rate because you're taking a big risk.
Right.
So it really kind of depends. But liquid, really easy to access. That's why people want it, right?
Right.
Long-term investments, on the other hand, are the exact opposite. They're illiquid. You cannot get your money out. If you invest in a syndication and it's apartment and it's projected to be somewhere between 3 to 5, maybe 7 years, well, then your money's in there for 3 to 5 to 7 years. You can't get it out. You could go to the sponsor and ask her to get it out. There's no obligation on anybody's part for it to get out. You went in knowing that this was an illiquid investment, right? So the pros for that is that it's non-emotional, right? You're going to make a decision here and you're making it for the next, say, 7 years. And so you can't take it out. If the market shifts and things are uncertain, you can't just go, I want my money back. Because it's there. You have to, be patient and trust the process. So you're usually going to weather the volatile markets because you're forced to be patient and wait out the process. The cons is that it's not liquid, but in our opinion, and why we're recording this episode, is that that's actually a pro because then you leave your investment alone. Also, it's more typical for you to be in a long-term investment. It's going to give you higher interest, and many times, if it's in real estate, a lot of other benefits as well.
Yeah, and typically this is the unsophisticated
investors.
They're the ones that are attracted to the liquidity because they've got it's not just unsophisticated investors. There's so many people now. It's the want it now mentality.
Yeah.
It's the Amazon. I ordered it at 10 a.m. It's going to be delivered today at 2 p.m.
Yeah.
I joked about I ordered something a couple of days ago and it said 3 to 4 weeks for delivery. I'm like, what, do they have to make it?
Right.
It's like so it just blew my mind, but it's that want it now mentality.
Yeah, and the wealthy are more attracted to the long term because they already know they've gotten to their position in life for a reason, so they know that it's important to trust the process and to be patient because that's how true wealth is created.
Yeah.
Plus, the more and more you invest, if there's opportunities for cash flow, that builds up and gives you the liquidity that you might want. If you've got cash flow of $5,000 a month or $2,000, whatever it is that you want for liquidity. It helps in those long-term investments depending on how you're making those decisions so that you can do that. So liquidity for liquidity's sake, which means there's no purpose. If we had $500,000, us putting that into a liquidity fund or some type of liquid investment just for the sake of wanting it to be liquid and it has no purpose, that is, I think somebody said, a fool's errand or something like that.
Right.
But it's speculative, right? Because we really don't know. Depending on the type of investment we put that money in, we don't know exactly what's going to happen. And we are going to be emotional and we're going to be watching it all the time to go, what is it doing? What is it doing? We didn't just use our wisdom and knowledge to evaluate an investment and put it in there and set it and forget it, which is what we typically like to do. That's why we love real estate so much.
Right, and it's funny because you have that is for speculators.
Yes.
But it's funny because when I first read that, I thought it said that is for spectators. But it's the same thing.
That's right. Yeah, you never really want to be in the investing game being speculative, right? You want to be looking at things that are proven and have the history of longevity and the ability to build wealth. So the illiquid investments are for the patient, the wealthy investors who are rewarded handsomely for a future point of date and time for investing in those types of things.
Right.
So what we really wanted to bring across in this episode is the fact that the more knowledgeable that you get, the more you understand the importance of the balance. Yes, it's important that some of your money is liquid, right? That maybe you have 6 months worth of expenses sitting in a savings account. Right now, with the inflationary environment, you're losing money in that savings account, right? But if that money provides you the peace of mind and you don't have another liquid investment that feels as safe as that savings account, well, then maybe that's the right thing to do, is to put that there. But other money, maybe you want an extra pot of 6 months that doesn't have to be in as safe as a savings account. And I'm not a big fan of savings account. I would be putting it in something else, but everybody has to make their own decision, right?
Right.
But if you had another 6 months that say you wanted an extra 6 months liquid, maybe you put that into an investment. That might not get skyrocket returns, but it's a pretty good investment that's going to outpace inflation at the very least and give you that liquidity. Now, anything beyond that, depending on who you are and how you're dividing up your buckets, stick it in a long-term investment where you're getting the higher, returns, where you're getting the tax benefits, where you're getting all kinds of different things, compound interest. There's so many different features on vehicles, and we're partnering with somebody. We'll talk about this in our live episode, but we're partnering with somebody who's invested with us for a very long time. We're building a liquidity fund because we know exactly how to give people some decent interest rates that will help with the inflationary environment that we're in right now, certainly beat your savings account, and are very, very secure. So like you not getting this interest rate would just be like, oh, the world like exploded or something. Right. But so we're working on that type of thing, and we're working on another fund for the long-term investments that has a little bit of an equity piece. It's got both of them have compound interest piece. Like we're creating these things because it's what we want, and what we want translates into typically what other people want, and so we all do it together.
Right.
And it's important to have that balance, is really the point here. So keep getting educated, keep listening, keep doing your research.
I did want to note though that we keep beating up the savings account, every time. But I will tell you right now that my savings account is beating my crypto account. So just letting you know that. I got you while drinking too. That was awesome.
Yes. And that actually speaks to depending on where you put your liquid investment, you could wake up and go, eek! Yep. That's one of them. We have some liquidity, but we put it in crypto.
Yep.
And it's going like this. But we're leaving it alone.
I don't think that would mean it'd have to go up. It's just going like this.
It's just taking it
from the second I put it in. Hey, look, I lost 45 cents.
Yeah.
Just like that. Anyway.
But we're not taking it out, right?
No.
We're going to ride the ride.
Yep, it's what I call an entertainment app on my phone.
That's right.
Because it entertains me.
In fact, I think you bought more. You're like, oh, it's tanking. I'm going to buy more.
Yep, I did. Yep.
And it's still tanking. That's fine.
I did. Yeah.
Listen to this pain point of Flips. I thought it was a good decision. Buy when it's down.
No, I'm teasing. It's not a pain point. It's fun to me. It's funny. It's because it's money that we were going to burn anyway, right? Yeah. We're going to light it on fire, so might as well light it on fire in the crypto account. Well, we hope that you enjoyed this episode. Make sure you're heading over to our website, freedomcapitalinvestments.com, to join the Investor Club.
Yes.
But make sure you're also visiting us on our Facebook and LinkedIn groups and YouTubes and all those other thingies. Make sure you hit the like button. You're going to hit the like button because
Flip's funny and he dumped more money into crypto.
Yeah, you don't have to like that. Yeah, just hit the like button. Yeah. But we like to end all of our episodes with
Invest Smart.
Live Happy. Bye everybody.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions and information on this show are not guaranteed. All investment strategies have the potential for profit or loss.